Welcome to readtheticker.com. Today we're going to show off an example when a stock declines on narrow spread with more volume. This indicates demand or simply lack of supply. More volume is moderate, above average, greater than the immediate volume bars, but definitely not extreme. The example we're going to look at is the silver ETF. Now, a quick summary of the presentation of the chart with Wyckoff logic. Here we have our selling climax. Psychologically, it would have been a bit of a climax, even though the volume's not extreme. But we're going to use that price action as climatic. You don't have to have volume extreme to have a selling climax, so long as it's climatic in psychological matters. Here's our automatic reaction. Here's our secondary test. A selling climax requires a secondary test to show that supply is dried up, and as you can see, there's lots of supply coming in on the downtrend. When we get our secondary test over here, the supply is dried up, so the sellers are pretty much getting exhausted. But if demand moves in here, a bit of more demand moves in there, but they're not really quite ready to. Two bursts of demand allows some accumulation. And even on the downswing, it allows accumulation. You've got accumulation on the up, accumulation on the down. But as you can, I believe here, this particular stage here, accumulation is getting quite serious, this last downswing. I'll just scroll down to a closer up view. Here's the same weekly chart, but it's closer up. Here you see, look how nice and neat those weekly down bars are, how narrow the spread is. Sorry. You notice how very narrow the spread is at the bottom here. The volume, I can see the last week volume was a bit low, but the previous week is reasonably good. Look at the volume for the wide range. All the volume bars hit the average bar. You compare that to the last sort of same price fall. Yeah, the volume bars are high, low, and you've got a bit of mix of supply, low demand, and widespread. Here it looks like a very deliberate accumulation going on here on the downswing. This has allowed the people with some serious money to buy on the fall between 21 and 19. It's a very serious accumulation. So here we have declining price action, narrow spread, and volume very moderate. The only way these spreads can be narrowed is when people put their sell orders in, that these sell orders are capped because the demand's there to soak them all up. I think bag holding they call it in some particular authors call that, where volume's coming in but they're just capping the prices. Now we'll just scroll down a bit to, here's the daily chart. Now room. These two down bars here and here. These two down bars wind range. That's supply coming into the market. Both that one and that one. Two little red bars where there wasn't really much opposition, because the blue bars on the right that followed that down range didn't really contest that supply that came in. But that's where the strong market players decided to get the price lower. There wasn't any true demand to push it higher. But they said, all right, let's just get this price down so I can buy it cheaper. So now they get the same volume coming in. See here, you get the same, this bar here. You get the same volume coming in, but the spread's narrowing up. It's good demand coming in, and once again, this little range here, same volume coming in, and the bar's narrowing up. There's definitely demand coming in, and obviously we've got these big boxes you see, they're monthly bars. Give you an idea where monthly support and resistance is. So there's definitely accumulation coming in there. Very bullish. And our RTT OPV indicator shows our strength here. The strength here. As you can see, the price swing action down hasn't been that serious. So we've had two moments of strength, and they said, "Oh, we don't want to go too far. We're pushing it up against itself." And they let it come down, and now they pretty much showing their hand here. The 2 moments of strengthening got strengthened to the downside. I believe we're going to give it a pop up, or maybe even a decent rally in the next month or two. Scroll down to the point and figure charts. Now, point and figure charts are pretty much showing off waves. Now, here we have a daily point and figure chart, and as you can see, I'll just go to the weekly. Let's have a look. Here's the weekly one. On the weekly point and figure chart, between the high and about let's have a look, there, that's where net volume of all bars was dominated by supply. See how the red bars are always the highest on silver? And as it's going sideways, we're just starting to see between here and here, the green bars dominate the red bars. That means supply has run out and demand is coming in from the bottom. As you see, the green bars on the net on the side is higher than the supply. Not that great, but it's getting there. You can see it on the daily chart better. Here we've got lots of red bars. Oops. Lots of red bars on the supply side. The demand starts coming in here to the big blue bars. But more so this little area here, this little area here between the 2 vertical blue lines, you'll see that the strong blue up bars, which is just the point and figure bars, a measure of a wave. The blue bars, and pretty much probably would dominate all the little red ones in between there. Even though price is moving quite dramatically between $21 and $0.29 all the way down to $18, you can bet your bottom dollar. But in the last, since February of this year, that there's been a strong accumulation going on. Based on the current action of the weekly charts, how determined that accumulation looks, I believe an upswing, especially in silver, and it's pretty similar in gold as well, is imminent. Thanks for watching. Cheers.